Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news most of the economic signals aren't very positive, even if there are some notable exceptions. First, however, we should note that new higher tariffs came into effect today in both the US and China on each other's goods. Beijing used to be rattled by US trade punishments, but now they seem to be taking it all in their stride. But tariffs aren't helping either country. China reported that its factory sector contracted in August, according to its official survey. It is not a large contraction, but it is one they would rather not have. More promising for them, however, their services sector expanded at a slightly faster pace in August, and faster than its US rival service sector is expanding. So yes, China is feeling an effect, but is far from hampered. In the US, the Fed's favoured inflation measure, the PCE, came in unchanged in the expected rate of 1.6% in July. But household income gains were weaker than expected, so the good consumer consumption data we got with the GDP results seems unlikely to be sustainable. The Chicago Fed's regional factory survey shows small declines in factory activity across the region, and it is far from the only region reporting declines, even if it is one of the largest. And American consumers, according to one widely watched survey, are losing some of their optimism. This survey fell by the most since 2012. It is not all negative, however. Canada reported very strong economic growth in the second quarter of 2019, up 3.7% on the back of fast-rising exports. But in India, their economic growth has now slipped sharply to under 5%, and a 6-year low as doubts grow about the Prime Minister's stewardship. Growth at this level is probably too low to keep lifting large numbers of people out of poverty. In Australia, their housing market is back with higher demand. Residential property sales in Sydney and Melbourne have risen to near boom time peaks as buyers respond to record low interest rates. Auction clearance rates have jumped to over 80%, and multiple bidders are common. Prices rose 1% in just the past month. Concerns about a sluggish economy aren't holding these markets back. The US Treasury 10-year yield is unchanged from this time on Friday at 1.5% and 3 basis points below where we were at this time last week. Gold is lower at $1,520 an ounce, down $5 from Saturday. US oil prices are noticeably weaker today too, and now just on $55 a barrel, back to where they were a week ago. The Brent benchmark is also lower at just on $59 a barrel. And the Kiwi dollar is holding at its lower level and will start the week at 63.1 US cents. That is almost 3 cents lower than we were at the start of August. On the cross rates, we're down to 93.7 Aussie cents, and that dropped more than 1 cent in the past week. Against the euro, we're at 57.4 euro cents, unchanged in the week. That sets the trade-weighted index back to just on 68.6 and takes the overall devaluation of the Kiwi dollar since the beginning of August to 3.8%. And against the US dollar, the devaluation is 4.3%. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.